It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader today. This video newsletter is brought to you by consensuspicks.com.
Welcome to this edition of the TradingTips.com video newsletter. In this week's episode, we'll be getting right down to the basics of technical analysis, trend lines, support, and resistance. Experienced traders may think they have nothing to learn about trend lines, but reinforcement of key concepts works towards your success. Without further ado, let's begin. First, let's talk about candlesticks. Candlesticks can be for any period, a minute, 30 minutes, an hour, a day, a week. Let's just assume we're dealing with daily candlesticks here, so we'll have a consistency in terminology. A candlestick tells us 5 things about a stock's action for a day. It tells us the stock's opening price, its closing price, its high for the day, its low for the day, and whether the stock closed higher or lower than the previous day. We'll take a look at how this information is conveyed on the next slide. Here are the 4 different types of candlesticks. First, we have an open black candlestick, then an open red candlestick. Third, we have a filled black candlestick and a filled red candlestick. All 4 candles have bodies and wicks. Here are the bodies, and here are the wicks. An open candlestick means the stock's close is higher than its open. When a candlestick is open, we know the bottom of the body represents the opening price. The top of the body represents its closing price. The top of the wick is the high for the day, and the bottom of the wick is the low for the day. When the candlestick is black, it means the closing price for the day was higher than the previous day's closing price. When the candlestick is red, it means the closing price is lower than the previous day's closing price. Here are filled-in candles. The only difference here is that when a candle is filled in, it means that it closed lower than it opened. Therefore, the opening price is the upper part of the body, and the closing price is the lower part of the body. Over a period of time, stocks tend to trade in patterns. Candlesticks tend to reveal these patterns. Candlesticks can be drawn in connecting the touches and near touches of the candlestick bodies and, less importantly, the wicks. These establish trend lines, and trend lines can be a reliable guide for a stock's future movements. One important kind of trend line is support. Support is a horizontal line on a stock chart that a stock just can't seem to fall through. The reason? There are buyers present at that price. Typically, stocks rebound off of support, but when support breaks, the stock typically falls much lower. Think if you came falling through a floor. Chances are you'd keep falling until you hit the next floor, right? On the flip side, there's resistance. Resistance is a horizontal line on a stock chart that a stock can't seem to get past. Each time the stock approaches or touches the resistance line, it pulls back. That's because there's a supply of sellers at that price. When resistance ultimately breaks, it means there are no more sellers at that price, and now the stock can soar. When something is so strong that it shoots up through your roof, the sky's the limit. Unless, of course, you're only on the first floor and there's another roof to get in the way, which is why you have to always be looking for the next level of support and resistance. Here's one good way to use trend lines, simply. When a stock breaks through resistance, the old resistance becomes support. Stocks will often stage a bull run here and then dip back down to touch support. This is a good time to buy. If a stock falters a second time and falls back to its support level, it may be a chance to buy again. Often stocks will make multiple touches back at the support before surging higher. Here's an example. We've seen horizontal support and resistance trend lines. We've talked about how all trend lines can be instructive indicators as to when to buy or sell. These tools are vital for day traders and swing traders, but they can also be useful for even long-term investors. Why buy a stock when it's in a downtrend? Why buy when it's bouncing between horizontal support and resistance in a channel, trading sideways? Even buy and hold long-term investors should limit their buys to when stocks are in uptrends and limit their sales to when they're in downtrends. Why not? The trend is your friend. Trendline analysis of stock charts gives you a statistical edge over traders who focus solely on the fundamentals. Nothing could be more fundamental than supply and demand, the very basis of market transactions. And this is the data that candlestick charts and trend lines illustrate. Now that you've learned the basics of candlesticks and support and resistance, you can be ready for more advanced technical analysis topics. We hope you've enjoyed this edition of the TradingTips.com video newsletter. Thanks for watching and good trading.
This Trading Tips video newsletter has been brought to you by Consensus Picks. Each week, Wealth Buyer's Consensus Picks software scours through 800-plus financial sources to produce a short list of multi-verified stocks. Stocks chosen by more than one of the most accurate stock-picking services. Then the Consensus Picks software automatically analyzes the short list of stocks using a series of proprietary filters, and it picks the single best stock out of the bunch. The Consensus Pick. Sign up today for Consensus Picks, and each week you'll be provided with the ultimate alert, a stock that's been independently selected by multiple stock-picking resources. A true Consensus Pick. Visit consensuspicks.com to sign up today. View more Trading Tips videos. Visit tradingtips.com. Sign up for our free video newsletters and become a successful trader today.